In this video, I'll talk about my experience with tracking my Bitcoin buys and sells. I'll also talk about the changes that are coming through with Trump's One Big Beautiful Bill, which is the new tax bill that may, if it becomes law, affect a lot of things, including tax on tip, etc. And I'll talk about the IRS rule changes that have already gone into effect that have upped some of these brackets for taxes. And so if you do need to sell some crypto, like where you'll land. And then I'll also talk about just the newer strategy that I've started using just to keep all this information static, so that if you ever do need to sell anything, you have the information. And I'll talk you through what I've been doing in that regard. So if you have a lot of buys and sells or trades or moving to cold storage and back, then no one entity is going to be able to track all of your cost basis on all of your transactions for you, unless you use like a crypto tracker. I don't really recommend these because I used one back in the day and it worked great for a while, but then the company went out of business, and so they no longer supported the platform, and I ended up with just a messy Excel sheet that had a bunch of errors in it that I had to go through and manually figure out. So you can use one of these if you trust it, and you trust it to not leak your personal information, because it's just a giant honeypot, because it has you put in all your information of every buy from every source you've ever bought, and so it knows everything about you, and if that information gets leaked, then you could be in some trouble. So don't really recommend these, but these are available if you want to look into an automated solution. The other way to do an automated solution is like if you buy on Strike, they will automatically calculate your cost basis. It's a new feature, so I haven't actually seen them do this, but they say that they'll calculate it for you and then just send you the tax forms at the end of the year. Of course, the issue for that is that then you can't pull your coins off into cold storage. You have to keep them on Strike for them to be able to calculate that. I know that they're working on a way that when you deposit from cold storage, you can input your cost basis, so maybe that's a workaround, but it still gets kind of messy. So I don't know if that I really recommend using exchange-based calculations either, for those reasons, not being able to pull it off into cold storage, or maybe being messy when you actually have to deposit onto the platform. So a better strategy, in my opinion, is just to use an Excel sheet, or an Excel sheet equivalent. You can build a form yourself or just keep it locally. But as far as I know, these are the fields that you need to track. So obviously you need how much Bitcoin you got. So like this would be how much Bitcoin you got for the buy, how much you paid for the buy, and so the date that you paid for it. So let's just say, these are just, for examples, but let's say on May 1st, I bought 1,000 sats for $1. And then I would also want to track where I bought that, just in case I need supporting documentation. So let's say I bought that on Strike, I could put Strike in there. And then this next section would be if you end up selling that Bitcoin. So let's say that you sold it, so you'd want to track what date you sold it, how much you got for the sale, and then if you ended up with a gain or loss. This is really important, and so that's simple and easy to figure out if you're tracking it in this way. So if we bought that Bitcoin on May 1st for $1, and then let's say that we sold it in a year and we sold it for $2, well, then obviously I gained $1 off of that sale, and then that would need to be then reported as part of my income for that tax year that I sold it. And it's also important to track whether or not that was a tip. And so if it was a tip, we can track it here, yes, no. And then it's also important to track the Bitcoin price. This isn't actually reported, but it's nice to know the price of Bitcoin, because if you need to calculate that, you could calculate it from the other data that I just showed you, but just having it written down there just makes it a lot simpler. And so the reason that we need to know if it was a tip or not is that if it was a tip, basically what you're supposed to do is report that tip as income. And so instead of this being a buy, this dollar that these 1,000 sats that we bought for $1, instead of being a buy, let's say that they're a tip. So what I would do is I would report that 1,000 sats as a $1 increase to my taxes to the IRS. And then once I do that, this Bitcoin price of, let's say, $90,000, that now becomes my cost basis. So basically I've already paid tax on that $90,000 Bitcoin price of $1. And then let's say that in a year or two, I sell those 1,000 sats, and let's say that the Bitcoin price is now at $200,000 instead of $90,000. Well, now I only have to pay tax on the difference. So I'd only have to pay tax on that appreciation from $90,000 to $200,000. I wouldn't have to pay tax on the full $200,000 because I've already reported that initial tip to the IRS and pay tax on it. So I know that's like super confusing, but that's, in my estimation, that's how it works in my research. Let me know if I'm wrong there, but that's what I think is what you're technically supposed to do. And obviously for examples, I'm just using like dust and small transactions here, like rounding errors, but this becomes more and more important as maybe you're running a business where you're getting a lot of Bitcoin tips, or you're buying and selling large amounts, or you're going to make a big purchase. It's good to know about this type of stuff. So the other issue here is that if you end up with tracking sheets from a whole bunch of different exchanges and services, you have to blend those all together seamlessly, and so that you might be missing data in some of them. Maybe the dates are formatted in different ways. The data isn't the same across fields, and so it's not really easy to sort, and spending a bunch of time in Excel isn't exactly like a fun time. One hack you can do is, like, if you have data that, let's say they put the dates in different formats, so like month, day, year versus year, month, date, you can upload just those distinct fields to AI and have it reformat it for you. You can also have AI now retrieve Bitcoin price data, so you can give it like a list of dates and it will do its best to find you the average Bitcoin price on that date. So that can be really useful if you're missing that data. So this is what the IRS form looks like, and so it's going to ask you what the property was. So let's say I bought Bitcoin, it's going to have me say how much Bitcoin, it's going to have me say the date that I acquired it, the date that I sold it, and then it's going to have me list how much I got for the sale. And then it's going to have me list my cost basis, so how much I bought it for. And then from that, you calculate your gain or loss in the last field. And then you sum up all of your gains and losses, and that's what gets added to your taxable income for that year. And that can be either a positive, or if you're trading crap coins a lot, then maybe you're negative and you have that reduction. But that's basically what the form looks like. And you can generate these fairly easily. I mean, if you have tons and tons of buys and sells, then it gets a little tricky, but you can just print these out and affix them and mail them all in. And then the other wrinkle here is that there's two different types of sales. So there's a long-term and a short-term variation of this. And so if you bought and sold the Bitcoin within 1 year, that's a short-term sale. And if you bought and sold it more than a year, that's a long-term sale. And you want to try and shoot for long-term sales if possible, because you get taxed at a much preferable rate. Selling some coins that you have held on an exchange, then that exchange will probably default to like the highest in, first out method, or maybe the first in, first out method, and you won't have to worry about it if they're handling your cost basis reporting. But if you have your coins in cold storage and then you need to transfer them back to the exchange to sell some of them, then you're going to have to worry about this. And basically what it is the different accounting methods that you can use for crypto. And so the most commonly used one is probably first in, first out. That means that the first thing you bought would be the first thing that you sell, and that's how most people do it. This can get messy though if some of your earlier buys were a lot of trades and swaps in between cryptos. It can be tough to figure this out. So there's other methods like last in, first out. So that's the last thing that you bought would be the first thing that you sell. There's also highest in, first out, and that can reduce your taxes in the short term because you'd sell the most expensive coins first with the highest cost basis. There's also specific identification, and that's where you choose exactly which coins or lots that you're going to sell. And so which one of these you choose is kind of up to you. You should check the IRS rules though. They may have rules specific to which one you should use. They had some fair harbor thing last year you might have heard about, where you're supposed to specify which method you were going to use in your different wallets. And so you can search that if you want more information on that. But I think with the Trump administration coming in, rules are going to change. But just be aware of this, that you can't just willy-nilly pick which one you want to sell unless you're doing specific identification. So if your records are like top-notch and you're able to do specific identification, then you can just choose which coins you want to sell. Otherwise, you're probably going to get stuck into FIFO or LIFO or HIFO. And then when it comes to actually reporting sales on your IRS form, that form that I showed you, you would need to list the buy, sell dates with the cost basis and all that information. Or if you're selling like a ton of different lots as one, you can group it all as one sale. Like say you bought 0.5 Bitcoin, but you bought that 0.5 Bitcoin in like 20 different buys, and it adds up to 0.5. You could sell that in one sale and then list that as just one line item on your taxes if you're using FIFO, LIFO, or HIFO. And so that might help speed up your taxes if you know the cost. Like say you bought 20 times and you know how much that cost to buy those 20 buys, and then you sell all of those 20 buys as one lump sell, and you can list it on your tax form, and you would list various as the purchase date because you have various dates of purchase. And so that is one option you can do. This does not apply if you're using specific identification, obviously, because that reporting method requires you to specifically identify each coin. The also thing that you can't do is you can't just summarize all of your buys and then say that my average cost is this, so I'll just list that as my average sell cost. You're not allowed to do that as far as my research goes. You have to choose FIFO, LIFO, HIFO, or specific identification. So here's an example of that form 8949 filled out. So let's say I bought 0.3 Bitcoin, but I bought that Bitcoin in multiple buys. What I could do is list various on the acquired date, and then the sell date I would know, and the proceeds I would know, and then I would just summarize all of the buys that went into that 0.3 and list that as the cost basis. And so in this example, I spent $9,000 total on all my buys, and then I sold it for $12,000, and I ended up with a gain of $3,000. But that's an example of a way that you could use various on the acquired date if you're using HIFO, LIFO, or first in, first out. And again, ChatGPT is saying you can use these tracking softwares if you'd like, and so these do automate things and make it a lot easier for you if you can trust these companies to stay in business and to not leak your data. And so that brings me to the last point I wanted to talk about, is just these upcoming changes that might be coming with Trump's new One Big Beautiful Bill, if that goes into effect. And then also the IRS updates, these have already taken effect. And so due to inflation, they've changed these brackets a little bit. I'll show you that in a second. And then they've also upped the standard deduction, which is great because that means you can write off more of your income. And so that'll be useful for a lot of middle class folks. It also looks to remove tax from overtime and tips, and so that'd be great if that actually takes effect. That won't affect Bitcoin though. Even if you get tipped in Bitcoin, the IRS doesn't look at Bitcoin as a currency. As far as I understand, they look at it as a property. So here's the 2024 versus 2025 inflation adjusted increase. So if you're single, you can write off an extra $400 of your taxes this coming year, so that'll be nice. And then I had to do a demonstration here. Like, let's just say that someone is making $60,000 a year, and the difference that this would mean for them. So in 2024 tax rate, they would get a standard deduction of $14,600, and then in the coming tax year, this tax year 2025, they'd actually get a $15,000 deduction. And so their taxable income, let's say they're making $60,000, their taxable income was $45,400, but now their taxable income is only $45,000. And so that means that they get taxed on $400 less, and so that will save them, whatever small amount that is, but it's better than nothing. And it looks like it would save them about $54.50. So there you go, there's some savings if you're making about $60K that you can plug right back into Bitcoin. And I was also interested to know, like, let's say this person earning $60,000 was to then go ahead and sell $10,000 worth of Bitcoin. What would their tax liability be on that $10,000 sale? And what would it be if they sold it short term, or what would it be if they sold it under the long-term cap gain structure? And the answer to that question is that if I had a sale of Bitcoin and I earned $10,000 off of that sale, and I sold it as a short-term gain, then I would be taxed at about $1,852. Whereas if I sold it as a long-term gain, I'd only be taxed $997. And so just by holding onto that Bitcoin past 1 year, I was able to save $855. And so that's like 10% of that $10,000 sale. So obviously selling long-term funds is really important if you're able to do it. Then if you're interested in tax brackets and how they've changed with inflation, here's that broken down. So how tax brackets work is basically your income is taxed in different brackets. So let's just talk about 2024 here. So let's say that you make $11,600 in that year. Well, then your tax rate is 10%. So you'd pay 10% of that $11,600. But then the money above that, let's say that you make more than $11,600, every dollar above that up until $47,000 is taxed at a higher rate. So you'd be taxed at 12%, and then every dollar you make above $47,000 is going to be taxed at 22%. So that's kind of how the brackets work. It's not that depending on your wage, you have one tax bracket. It's that if you make above, the only people that have one tax bracket are those that make under like $11,000 a year. Anyone that makes more than that has multiple tax brackets, if that makes sense to you. But basically, because of inflation, they've changed these rules so that now in 2025, these tax brackets are a little bit adjusted. And so that's actually a benefit to people paying taxes. And so now you can see that the minimums here have gone up a bit. So let's say that your tax liability is let's say that your income is $50,000, and so you're actually going to pay a little bit less tax in 2025 than you did in 2024. So in 2024, that up to $11,600 is taxed at 10%, but in 2025 that's gone up, so now it's up to $11,900, and so you have that $325 is taxed at 10% now, whereas in the previous year it would have been taxed at 12%. So you can see that there's a little bit of savings there, and that continues on as well on these other brackets. And so right here, this minimum has been increased, and so you're taxed less, a little bit less. This has been increased as well from here. So it's negligible. It's not a huge amount of money, but it is something. And again, you could plug all those savings right back into Bitcoin. And to give you an example of that, using the $60,000 earner metric, in 2024, that person would have a total tax of $52.16, whereas with the new rules, they'd only be taxed at $51.61. So there's a small savings there. And then if you don't understand what a standard deduction on your taxes is, it's what most people use. Basically, it just gives you a standard deduction. So let's say that you earn $60,000. So I earn 60K. What the IRS does is it says that for living expenses and other expenses that are hard costs, you can deduct a set deduction. And so that deduction has gone up to 15K. So you would take your overall gross earnings, which is say 60K, and then you would subtract the standard deduction of 15K. And so now I'm only being taxed on 45K of my income. And so that $45,000 is your actual tax liability. And so then from there, you can take that 45K and look at these tax brackets and figure out what your tax liability is here based on the brackets and the fact that you have $45,000 worth of taxable income. And you can see that if you only have $45,000 of taxable income, then you're only using these two brackets. So you only fall into these two brackets, and it's fairly easy to figure out how much you're going to actually end up paying. And then that way you can look back, say you earn wages at a job, you can look back and see how much they're deducting from your paycheck every month, and you can figure out, if you're going to owe or how much you're going to receive back at the end of the year. Now, obviously, I'm just talking about federal taxes. If you live in a state that has state income taxes, that's another complication. I just hate this whole structure. But I think it's better to be informed and to know all this stuff than to not. So there you guys go. I don't know. It's a lot of stuff, a lot of boring figures and charts and stuff. Let me know if I'm wrong on any of this stuff. Again, it's just my experience in using AI. So if I got something wrong, let me know. Obviously, this isn't financial advice. I just wanted to share some thoughts and some things that I've kind of figured out over the years. But yeah, those are the of you that stuck through this. Have fun and enjoy your summer.